Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Thursday, October 31st. We're going to take a look at SOFI today. So SOFI has had an immense run lately, a nice, clean, smooth run. And I know my position, which is only shares, no options, is up almost 50% currently, my swing position. And so I wanted to come take a look. We're going to start off here with the EMAs, and then we're going to hide the EMAs and take a look at the support and resistance levels that we've had on the chart, maybe add some new ones, and then we'll flip over here to the ThinkOrSwim study and see where things are situated there. So from an EMA's perspective, this seemed like a pretty obvious move. Of course, nothing is 100%, but at some point you start to go, okay, the balance seems to be tipping here. And what I saw is this gray line right here. This is the 183 EMA. And you see this continued attempt at the 183, right? Rejecting off of it, and then it was able to push through. And it tried to almost sort of double bottom on the 183, but it got pushed below. And then it made another attempt, and it was able to swing higher than the previous swing high. But it got rejected through the 183 again. However, the low on that rejection was much higher than the previous swing low, and it made yet another attempt, right? So all these attempts now are coming closer and closer to the 183. So it doesn't have to get some significant distance from it and then reapproach it again. And so when it made this push through, it just seemed to start becoming more and more apparent, especially as these shorter term EMAs were crossing over the 183, that the sellers were slowly but surely getting exhausted. Whatever sellers were hopping in during all these periods here, and even back here during these periods, that were selling, wanting to get out right around that 183 EMA, they were just getting exhausted. And at some point there weren't going to be any more, right? That was sort of my tipping point theory for jumping in as this turn was kind of taking place. And so when it swung higher high again, and it pulled back, here's where it doesn't need to hit the 183, right? It settles right on the 34 EMA, which is that red one. And by this point, all of these EMAs are in a bullish formation. And then it was just liftoff from there. And so that it's been a really nice, clean, again, I say obvious, it's easy to say in hindsight, but this was one that just seemed to take shape over a long enough period of time with enough of repeated efforts that it did start to show itself, or seemed like it was showing itself more apparently than we might otherwise feel at certain times. So let's hide these for now. Do I just turn these off? Yeah. And we'll get our levels in. So these are the levels we've had in the chart for, I don't know, years probably at this point. We see the building here through these levels, right? There was this downtrend resistance that had been stuck under, and it did a lot of effort to come back through that on that large dip down that we were just looking at with the EMAs, but pushed off and was able to build, right, support over this 693, and then push through toward that 826, come down and reconfirm support over that 745, and now we've just been flying through some of the additional levels. So we have level up here at 1356, but I'm going to throw in a couple of additional ones. I mean, the topping out around here seems a bit obvious. Let me see this. This is right around where it is right now, this 1110. That's that previous candle there. In this day here, it had a high 1110. Let's just see how that holds up in, yeah. So you see here, it's catching support, right? It's trying to hold it, tries to regain support over there, loses it, falls short of trying to reach toward it again, sort of reconfirming resistance there. So 1110 might be a decent area. What did it do here? Yeah, sort of compressed, convalesced, if you will, along that level. I mean, this is way back when, right? This is in 2020. Okay, so I feel good about that 1110 for the moment, especially given the relatively recent price action of that candle topping out there. Let's see what this 1170 is all about. I don't know if there will be Oh no, there's quite a bit of topping out, and and this big support here, that was a big one, right? Yeah, some near misses. Okay, so that one makes a lot of sense to me. And then we're gonna throw in at least one more because we have, like I said, we have something up there in the 13s, but we don't have anything at the moment in the 12s. I want to see what looks strong without cluttering things too much. I would go here, 1548, basically the approach toward 1550. Would make sense up above that 1356, and then getting something in here in the 12 is going to be a little bit trickier, but let's see what we have. It's commonly, it's just such a big percentage range, 1170 to 1356, but I mean, in reality, you look and it does just sort of move within that range for a period of time, but if it did something more substantial than that, where would we place it is the question. Yeah, because of the way it's moving here, we're gonna have to split the difference on a couple things. I would go here right around 1268. So it's sort of in no man's land as it pertains to like psychological levels, right? It's not on the 50, it's not on the dollar, it's not even on a 25-cent a portion. So but 1268, everything else being level or on balance, seems like a fine place to put that for now. So if we kind of head back here to our current day candles, here's what we see, right? That battle right now for this 1110 level that we put in, and then let's get rid of that. Up here we'd see that 1170, and then as we start to stretch, then we stretch toward that 1268 level, and then beyond we have already that 13 level on the chart. Here's what it looks like intraday. Let's see how this motion looks. Yeah, so the motion off of these looks nice intraday as well. So that makes me feel like those are probably decent placements for the time being. All right, so let's flip over here to the ThinkOrSwim side of things. Now, the view here is multi-layered. So I have these ATR levels on the chart, but they've been very helpful, right? You see this is the call trigger, which doesn't mean you have to buy calls, but the idea here is just this is when, per the ATR levels, you would anticipate it to push if it's able to maintain support over there, right? And it got rejected. This was back in September. In this current setup that I have, these levels hold for 1 calendar month, right? So in September, it was rejecting off of the call trigger, but not dipping below, at least in the second half of the month, below the put trigger, which is that yellowish line, gold line, whatever. And then as we got into October here, that's when you saw it start to build off of this baseline, right? This one that sits between the call trigger and the put trigger. And then it got clear support. It was able to push through the call trigger, which is what it failed to do here, what it failed to do there. And yeah, see, it sort of faked out or only went, a portion of the full ATR there. But in any case, it was able to push up through the entire level here, through the 1040, as it were, and now trying to build support over that level. And getting some nice push still into November. So we'll be able to maintain it. This, as it's currently situated, is going to put it right along the baseline heading into November. So again, these levels will kick off tomorrow, November 1st. And then you'll see that call trigger it's dynamic, so it could change a bit, but it's going to be about 1168 or so. And the put trigger is going to be down here around 10 and a half or so, 1040s. But yeah, it's going to come in right along the baseline there, right around 1108 or so, if nothing dramatic changes. So that's where it's situated now, but that call trigger was a nice motion there, and it's been holding outside of the upper bound of the channel. So that one makes me a little bit concerned. Like I said, I do have a swing position currently on. But obviously setting a trailing stop loss or setting, stop loss that will sell at the market, whatever it is, will help you not get the rug pulled on you if there's like a really bad turn or something and you aren't paying attention and you lose track or whatever. But yeah, it's looking nice headed into November, but we'll see how it interplays with this, with the wave cloud here, because, as it pertains to this channel and this wave cloud, it's just been playing outside for so long, and at some point you look for it to come back in and test it. Now, it did that a couple of days ago, so we could take some solace in that, and it wicked off of the mid-range of the channel, which is what you'd want to see for continued possible bullish momentum. And now we're back out of the upper bound of the channel again. So the question is just, what's the sustainability of that all? You see a slight dip in the bullish momentum per the histogram here in the TTM squeeze indicator, but nothing tremendous. So I want to see if the TTM squeeze indicator called this out. No, not really. Not at all, actually. Okay. Now, if we look down here on the momentum oscillator, we see it was way up here, right? This green line was way up here between 100 and 200, which gets really overextended. I'm reluctant to say this, but you can sort of think of that overextension as being RSI in nature, just not the actual oscillator versus the RSI itself, like not the indicator, but just the concept of RSI having levels by which you consider it to be overbought or oversold. And so right now it's moving back toward a compression zone, but it still is, very much on the, as you see here, yes, as it's, playing out its bullish momentum. So we'll see if it comes back down into compression like it did here, which was actually a nice compression right along the call trigger, and then it took off, which is certainly what you want to see. And so if it does pull back, or it does sort of get hung up on this new mid-level, then, maybe we see some compression along there, and then maybe inching toward this or inching toward that might give us some indication of where that momentum is about to shift and what that could look like. And certainly looking for any major divergence, right? From this candle to this candle, we do see a bit maybe of a dip. I often find it really hard to sort of concretely decipher on this, but you see here it's saying 82.22. And then on this candle here, 82.7. So it's showing a very slight uptick on that green candle. So flat to slightly up, at least that's not necessarily divergence. And so if that's the case, then, maybe we're okay. But, I do look for that to see if there is a candle moving up while this oscillator is moving down. That can often be problematic, or can give you sort of a signal of, okay, you might be seeing a reversal here, which reversals, as I'm sure you know, are just very hard to call out and see in real time. All right, folks. Well, I hope that your trading week has been going well. And as always, I appreciate you watching, and I will see you in the next video.